Still with us in studio, Deryck Janse Van Rensberg from BOE Stockbrokers. Deryck, well, we saw those numbers from the Dow Jones turning around, so it was a positive open. It's turned around. Perhaps we're going to get that pullback that you've been talking about, 5 to 8%.
Well, I hope so. I mean, I've really been using this opportunity for traders to move into cash, and I am expecting a pullback. So at this level, I would like to see that. But again, I think that markets globally seem very tired at the moment, and locally, our JSE we're getting some positive data coming out of America, also, in and amongst that mixed bag of data, but it just seems very fatigued at this stage. So, I am expecting it to start to top out around here. I don't like calling a top in the market because, momentum can take it further, but it does seem fatigued, and hopefully we do start to see the start of that short-term pullback.
Of course, we were chatting about the US earnings, and I think 80% of them are said to have reported better than expected earnings. Lots disappointing on the revenue line, though. And that was something earlier in the year that investors were starting to focus on, whether companies were building sales, because you cannot just cut costs forever.
Well, that's what it's all about at the end of the day, and obviously working off that low base effect, cost-cutting procedures did some really good creative accounting for a lot of these companies. So that's why I reiterate what I was talking about earlier. You need good quality earnings that are actually going to drive these companies and these markets higher. That's really going to give it some fundamental reason to buy into these markets. So, now that that low base effect is out of the equation, or working its way out of the system now, you need to look forward and say we need those quality earnings to drive markets globally. You are seeing the start of it, and you are seeing some traction. We're sitting on very low interest rates at the moment, and my sense is that in the next 6 months, when you start to see the next set of earnings figures come out of the US, and as we move into 2011, you are going to get that fundamental catalyst that's going to cause you to move into equities, and hopefully we see that spike in our market move beyond that all-time high above that 33,000 level.
Taking a look at our earnings, because we've had a few trickling in so far. Next week, earnings really kick off in earnest. I think we have Nedbank out next week. We have African Bank Investments and ABSA. So a big week for the financial companies. What are you expecting from them? Because, of course, we know they're coming from a low base. They're getting back to 2008, 2009 earnings levels. And of course, their impairments should be starting to look a lot better.
I think that these results that are due are going to be they're going to be quite positive, and I think the market knows it already. And if you just look at some of those top 4 banks and look at what they've done in the last 2 to 3 weeks, they've really had a strong rally, about 10 to 12% upside, possibly even more than that. And I think at the end of the day, reading into those balance sheets, a lot of emphasis also needs to come down to credit extension and whether they're willing to lend out, and obviously sitting on a low interest rate environment, the capital's very cheap at the moment. So they do need to start generating some revenue from credit extension. But again, I reiterate, I think a lot of the positivity that will be released in the next week is possibly in these share prices already. So, I am expecting better than expected, better results there. But I don't see too much more upside in these banks. I think if anything, you might see a sudden spike and then possibly some profit taking thereafter.
And if you look at the credit extension numbers that were out this morning, really a continuation of what we have been seeing over the previous few months, where there is very little demand from the private sector. And of course, it's worrying. Well, you don't know whether it's because companies aren't wanting to borrow or banks just aren't wanting to lend at this stage. What do you think about that?
Look, I think at this stage, we've just recently come out of the financial crisis in the big picture of things. And there's definitely a cautious attitude out there. So although capital is very cheap at the moment, companies and individuals alike are very cautious to lend money. They don't want to overgear themselves. They want to be in a situation where they can tick up slowly over time, not preempt a bull market phase, gear themselves to the max to make exorbitant capital gains. So I think it's just an underlying cautious attitude in the market out there at the moment. And eventually, I do think in the short term, in the next 3 to 6 months, you are going to see that credit extension kick in. People are going to get appetite to lend. Capital's cheap, and companies need to expand and grow. So I am bullish moving into 2011.